Right, good morning ladies and gents. Welcome to the 7:15 webinar, 29th of January. Ali on the mic. I hope we've all had a good night's evening, good sleep and ready for another day's trading. So we're going to have a look this morning at a bit of a Fibonacci dedicated webinar, okay, of course for you students in week 3. Hopefully looking to apply and utilize Fibonacci. So we're going to have a run through some charts, going to look at some examples and put it into practice. Okay. First things first though, quick look to the overnights. Fairly quiet overnight, a little bit of data out of Australia, okay, looking at their inflation figures, their CPI, came out with a slight beat on expectation. Okay, slightly higher than expected for the headline quarter on quarter and the trim mean year on year. Knock-on effect of this, small movement in the Aussie dollar, just a range of around 20 pips. However, it has led to a couple of their major banks changing their forecast for the next interest rate decision, which is on the 4th of February. Okay, so the chance of a rate cut, a number of banks have cancelled that. However, of course, still some in line with that potential rate cut. So we'll wait to see how that unfolds. But a little bit of positivity for the Aussie dollar, not particularly reflected in the market. They're a very small and tight range. Very quick nod to the headlines. Okay, nothing too much to talk about. Of course, coronavirus continues to spread. So we're up to 1,500 new cases in China, with the death toll now having passed 130. Okay, so this is spreading. There's no sign of this slowing down. And of course, moving on to different soil now, Australia starting to feel the brunt of it also. Okay, looking to put sanctions and looking to put restrictions of movement, similar to China have done, to try and stem the spread of this virus. So that again, as always, kind of taking the headlines. Outside of that, really not too much to talk about this morning. Okay, so we're going to get stuck straight into the charts, and we're going to run through the correct use of Fibonacci. Okay, and the chart we're going to use to do that, okay, is going to be the Australian dollar. Okay, the Australian dollar. We're going to have a look back at some historical events. Okay, it's always important to do this. Okay, it's important to do this for all of your trading, all of your back testing. Use historical data to your advantage. Okay, you can of course put back test. You can put strategies through their paces with live data as it unfolds, but of course you can do it far quicker if you look back through historical data and see and act as you would have traded it as the data was coming out. Okay, it allows us to rapidly speed up the process, and that's what we're going to look to do here with the Aussie dollar. Okay, completely up to you, Suresh, how far back you go. Completely up to you. The more data, the more testing you can do, of course, the better and more proven your strategy is going to be. But that is, of course, completely up to you. In this instance here, we're going to look for around 12 months worth of data on the 4-hour chart. Okay, on the 4-hour chart, there's no reason for that being on the 4-hour chart. Fibonacci, which we're going to look at now, is applicable across all time frames. Whether you're on the 1-minute chart as a short-term intraday trader, or if you're looking slightly longer term, as we will be here on the 4-hour Fibonacci. The same rules apply. Okay, so we're going to follow this through. Okay, please feel free to get involved. I'm going to ask some questions as we go through this. So please do get involved. Can I please request for those of you further through the course who have completed this are slightly more reserved, and allow those in week 3 to try and answer the majority of the questions, please. To obviously support their learning of this. Okay, so first things to note with Fibonacci, it is a secondary indicator. Okay, massively important to recognize that. It is a secondary indicator. It must be used alongside our primaries to try and bolster and improve our chances of success. Okay, we must not make trading decisions based purely on our Fibonacci. Okay, we must combine it with those primaries, which you've covered in weeks 1 and 2. Okay, so first things first. Aussie dollar here, are we in an uptrend or a downtrend on this chart? Seems like an obvious question, but are we in an uptrend or a downtrend? What do we think? Uptrend, lovely, of course, yeah, we're in an uptrend, okay, and I want us to start throughout the whole of this webinar I want us to be thinking about higher highs and higher lows, technical uptrend, and lower highs and lower lows, technical downtrend. Okay, it's really important that we can correctly establish, understand those in order for us to correctly apply Fibonacci. Okay, so before we start to draw any trend lines or anything like that, I just want us to get into the habit of starting to circle our higher highs and higher lows. Okay, so we'll come up through this process here, starting from the low, very rapidly ascending moves here. Okay, so the pullbacks in this uptrend, very slight, very small, but we can see these nice, aggressive, higher highs and higher lows. Gets a little bit more tricky up here at the top. I think we probably do take that as a move there. And this now currently, the current higher low in place. Okay, is there a trend line in play? Again, looking to take that from the low, trying to take in all the bodies, all the wicks, the lower shadows in this instance. And currently here, only 2 touch. Okay, only 2 touch. If we look to get slightly more aggressive, we can take this trend line here. Okay, first touch cuts here, but re-respects the level. Second touch, third touch, fourth touch up here now. So that trend line certainly in play. Okay, so we're going to run this through, looking back historically here. Okay, at this point here, okay, are we in an uptrend or a downtrend? Uptrend or a downtrend here, folks? What do we think? At this point in time now on the chart, uptrend or a downtrend? Uptrend broken. Okay, the trend line has certainly been broken. Trend line's certainly been broken. But this low which I circled here, okay, this low I circled, is this a valid higher low? It's not yet. Okay, in order for us to have a valid higher low, if we come back to Dow theory here, in order for us to have a confirmed higher low, we must break through the previous high. Here is that previous high. Clearly we can see these 2 attempts at that level failed to break. So this one here is actually a bit of a dummy pass here. It's not relevant. Okay, it's not relevant. So this here is the previous higher low. Okay, so if we put a line through there, we can see now that higher low is still intact. So technically, yes, we've got a big question mark on this uptrend, but technically here we're still in a uptrend. Okay, you've broken this uptrend line, but failed to break the previous higher low. So still in an uptrend. Okay, so we should still be bullish at this point in time. Now we've broken the level. Okay, uptrend is now over. Okay, uptrend is over. Are we now in an uptrend, a downtrend, or a sideways market? Do we think uptrend, downtrend, or sideways market? Get involved, folks. Downtrend. Okay, this is now a sideways market. Okay, sideways market. Bear in mind, I mentioned at the start of this, we want to talk about technical definitions of an uptrend, higher highs, higher lows. Yep, Craig, absolutely potential. Not yet in a confirmed downtrend. Okay, we must have lower highs and lower lows in order to confirm downtrend. We currently, all we have at this point in time is a new lower low. Okay, the high here still in play. So before we can confirm this as a definite downtrend, we need to see this pullback and a break to give us the lower high and a lower low. So that, as of yet, hasn't happened. As of yet, hasn't happened. Okay, so sideways market. Technically here, just technical definition, we're in a sideways market. So how are we going to look to use Fibonacci? Fibonacci is there to give us an indication, a potential buy or sell zone on a retracement of the market. Okay, so his golden ratio, the 61.8%, 0.618 was his golden ratio. Okay, he's seen everywhere through the natural world, from formations within flowers to the human body to our DNA. The human eye naturally perceives the 61.8 ratio. It's aesthetically pleasing to us as humans. Okay, so who drives a market, folks? Who drives markets? Who moves them around? People. Absolutely, people. Okay, so on the naked eye is drawn towards this ratio, and therefore, if people are moving these markets, it stands to reason that this 61.8% ratio will be seen within the markets. Okay, we will respond to it. So what we're looking for is when we get a sell-off, as we're seeing here, okay, this nice strong sell-off, at what point is this market going to rebound? At what point is it going to retrace? And where is it going to retrace to, importantly? Okay, and there's a few levels which we can look for. We can look for 38.2%, 50% retracement, and then that golden ratio, the 61.8% retracement. And what we're looking for with that is, if this was the sell-off, how far will we rebound? Ideally, that's 61%. Okay, so we need to see this market try and rebound. We need to try and see it retrace. And we have to make a judgment call as to when we think that is. Now, at this point here in this sell-off, this is starting to look like a bit of a rebound, a bit of a retracement. Now, we're not looking to buy into this, importantly. Okay, we're not looking to buy into this. We're under the impression here that potentially this could now be in the process of forming those lower lows and lower highs and going into a downtrend. So we're looking to go with the trend. The trend is our friend. Okay, so we're looking for that retracement region. So what we're going to do, come across our Fibonacci, and when we're in a downtrend, we are looking to go from the previous high to the current low. Okay, that's how we're looking to apply our Fibonacci in a downtrend. Previous high to the current low. So let's apply that logic, come from this previous high up here, and we bring it down to the current low. And you'll see it's put in place here, 50%, 61.8%. I can also introduce that 38.2%. Completely up to you here. You'll make a decision as you go through your trading experience. Which of these levels do you feel are relevant? All of them, one of them, two of them, completely your decision. For my own strategy, 50%, 61%, the only two which I'm particularly interested in. 61.8, of course, getting a nice red indication here as it carries the greatest significance. So we're looking for that move back up into that region. Up we come. Okay, what's important to note here, first off Fibonacci, once we break that 38%, it's done, it's been disrespected, we can remove it from the chart. Always good to do that, keep your charts as uncluttered as possible. So we move up, break the 38, find that 50%. Okay, this 50 to 61% area becomes a sell zone. Okay, we can box that out and say anywhere within here, I'm looking for opportunities to try and short this market. But what did we say right at the start of this? This is secondary, of course. This is secondary. So we must combine this with some primaries. Okay, support, resistance, candlestick patterns, price patterns. Any of the above are applicable. Trend lines, of course. We can't just blindly click sell when we hit that 50%. We must wait for that confirmation. Okay, we've talked a lot in the first few weeks about confirmation, trying to increase your hit rate. Okay, so we're waiting for that. We get a little bit of respect for the 50%, and then we break through it. You can see we've gone straight through it here, and again, that 50% now comes out of the equation. Okay, it's been broken. The last thing standing is this 61% retracement region. Slight sell-off here. Where are we going to end up? Right, we're up to that 61% now, testing that 61%. And what's nice to see here is this previous higher low, which carried significance on the kind of end of this uptrend. Is that going to potentially act as some resistance through here? Okay, we can see this initial candle that broke the level, closed back up at that level, and then we failed to break below. It took 2 attempts to get down through here. So potentially we're going to end up with that junction here of resistance from the primary resistance level and the 61.8% retracement zone. So what do we get? We see selling start to come in. Okay, we see selling start to come in. At this point here, have I had any real kind of confirmation that this is definitely going down? And bearing in mind, we're not in a confirmed downtrend yet. Okay, so this is a fairly high risk trade. Yes, this has been aggressive selling. Yes, we've come back to the 61, but I'm not in a confirmed downtrend. Have I got any primary evidence there that this is definitely going to continue lower? What do you think? Have we got anything in there? No, I don't think so. Okay, I don't think so. We haven't got any candlesticks. The resistance level is weak. Okay, so there's really not a lot to go at. However, what we have now started to have form is another potential support level. Okay, hopefully we can see through here a nice strong support level. Let's just circle these. Initial test came from here. Let's make these a different color so we can clearly identify them. Initial support, yes, we chopped it up here, but most recently resistance, broke with the immediate retest, retested it again. So this becomes a really nice healthy support level. If we can get a break of that, of course that could then be the confirmation to see this move lower. So in terms of potential entry here, we could look for an entry level through the break of that support region. Stop loss, of course, as always, back above the high for us, looking for nice, safe, confirmed stop loss, and targeting back down to the previous lows. Okay, risk to reward ratio here, really not too great, just sat above a 1-to-1. But that's within our risk parameters, that's within our risk management rules, so we're happy to take this position. Okay, now, coming back to the start of all of this, if there's one reason why I wouldn't be too happy to take this position, this is a trend-based tool, Fibonacci. We're looking to use this in a trending market, and at the moment, this is not a trending market. This is a potential downtrend. Craig mentioned it, potential, but definitely not confirmed. So let's see where we end up here. The break comes, and we end up with deep retest. Look at that, deep retest, but look how well confirmed our entry level was. We've now had a retest of that level. Before, did we push lower? Yes, we eventually push lower, okay, and hit our target. Now, a few things have happened here. Let's clean this chart up slightly. Let's remove those support levels, those circles out. Okay, a few things have happened. The most important of which is what? What is the most important thing that has now happened to this chart in terms of us looking to use Fibonacci? Yes, we have a confirmed 61% retracement, not quite what we're looking for though. Yeah, we now have a confirmed lower high, thank you. Okay, a confirmed lower high. Here is that lower high. Why is this now confirmed? Why is this lower high now confirmed? Perfect, thank you, Suresh. Yeah, absolutely. We've got that lower low. Yeah, we broke through this previous low here. Okay, so confirm now lower highs. And whatever happens here now, we will have a lower low generated. Okay, that's absolutely perfect. So now we're in a confirmed downtrend. Now Fibonacci can become an even more powerful signal for us. Okay, so what are we going to do? We're going to repeat the process. We're going to try and identify where the bottom of this next move is. Okay, let's see what we've got. We're looking for the price to start to bounce. Showing a little bit of a bounce here. Okay, so we apply our Fibonacci. Let's move this out. Again, downtrend. So we're going previous high to current low. So we're going to come from this previous high down to this current low. Let's reintroduce those other levels. That 38.2 and the 50% retracements both come back into play here now. And away we go. Straight through the 38%. You'll see here why I'm not a huge fan of using the 38%, because for me it's not respected enough times. We continue, little pullback, marching higher. Right, now we're up to the 50%. Okay, are we going to find resistance at that 50%? Okay, again, this becomes a sell zone. This becomes a sell zone. Now, if this was to make its way up to the 61% retracement region, why would I fancy that as a potential opportunity in a potential region to try and sell it? Why would I fancy that? Why would that carry a nice level of confirmation for me? One, it did it last time, so we were kind of history repeating itself, absolutely. Anything else? Perfect, yeah, absolutely. It lines up with this prior resistance. Okay, we had a strong entry level through here with the retest. If we can get back up to this 61%, that resistance level is going to be sat there or thereabouts. Okay, so again, that's great for us to see. We've broken straight through that 50%, so that comes out. Okay, that's gone. Just that 61% standing, same as this first trade. Up we get. Okay, we're getting up towards that 61%, and now we've tested it. Okay, so we're now thinking sell. Yeah, we're thinking opportunity to short, but again, we're looking for that confirmation. Looking for that confirmation. We have a small counter uptrend. Okay, why is it a counter uptrend? Again, we're looking at confirming these. Oh, let me take that out. Okay, I'm looking at higher highs and higher lows again. So my thought process is always moving towards these when I'm starting to look at a trend-based strategies. And this is currently what we have. Okay, on this little counter trend, these higher highs and higher lows. Okay, let's wind this through. Okay, through the 61%, but now testing that primary resistance level. Testing that primary. Again, I have nowhere to sell this. I haven't got a previous low because that low is right the way down through here. I don't particularly have a counter trend line in play at the moment. If I was going to have one, it's going to be coming up through here. But again, as of yet, that's not in play. Okay, only two touch, only tentative. And also I haven't taken this from the low. So we could easily look to take one through here, but that's of course not in play for us. So nothing really available to us there. So no trade taken as of yet. So I haven't just hit the 61 on that resistance and click sell. I wait for that confirmation. Right, now we've broken through, which has given me a little pullback, a little high. Okay, a little higher low. Now a break of that higher low all of a sudden starts to become quite a nice entry level. Okay, if I can see a break of that low there, I get a good confirmation that this counter trend is reversing. Yes, it's not looking great at the moment as the primary resistance breaks, the Fibonacci breaks, but we can wait to see how the market reacts here. Big aggressive rejection, so you may feel this is still in play. So repeat that same process. In order for this to come into play and for this trade to get triggered, the order to be triggered, we're going to have to see a break of previous support, this previous higher low, which to be fair, actually if I nudge this across, it's a pretty reasonable level here, just a little weak resistance test, broke support. So if we can see that turn around, we may still be happy to take this trade going with the dominant trend. Okay, so let's see how this pans out. Looks like we're failing up at this resistance and that 61%. Multiple attempts of it again here. We get an aggressive break. And we rapidly move off towards target. Okay, and we can see the aggressive nature of the selling here. Excuse me. We can see the aggressive nature of the selling. Look at the time it took for buyers to grind their way higher in this bullish, bearish market, sorry. That was the time taken for them to get up to the high. Okay, look at that versus the time taken to give away all of that and be back down at the lows. We're looking at probably a third of the time, okay, 3 times longer to make those gains, going against the trend. It's the advantage of adopting that kind of trend is your friend policy and looking to capitalize on the momentum that comes with this trend continuation. Okay, so let's have these out. Again, don't want to cluster up the chart. They served a purpose to get us into that short position. But once that's done and dusted, get it off the chart, get it out of sight, and start afresh. So, down we come. Again, what's happened here? We've now confirmed we had the new low, and I've now locked in a new lower high. Okay, again, confirmed downtrend. Brilliant. Okay, it's exactly what we want to be seeing. And this is very much a game of repetition now at this point. Okay, we're going to see this sell off. We're going to look for a bounce to apply our Fibonacci. Now, what rules have we got? When we were talking about trend lines in week 1, you would have talked about trend lines. What were the characteristics of a nice trend? What would we like to see? If we're looking at a trend and saying, you know what, this is a healthy trend, what would we like to see? 3 touches, yep, of that trend line, absolutely. Anything else? Evenly spaced, brilliant. Thank you, Suresh. Okay, evenly spaced. So currently, in these swings, I have this as a swing. We took this as a swing, nice and even. So we would expect a similar kind of deal. Okay, we'd expect a similar kind of deal. I'm not interested, therefore, in this little blip here. Okay, it'd be very easy to say, actually, you know what? I did make a lower low. Oh, here's my lower high onto another lower low. Okay, we could take that, but we're looking for those nice uniform swings. And so far, this has been pretty healthy. So I'm expecting something like this. Okay, there's also something else that's happened here within this little section of chart down here, which makes me believe potentially it wasn't technically driven. If you were to look at this section of chart, what would lead you to believe that potentially this wasn't massively technical? Yeah, absolutely. A large spike higher, big aggressive Maribozu here, a bullish candle, immediately rejected. And within the next couple of candles, we were back down trading at the same price. And then we started to kind of move more consistently in line with what previous expectation. So I'm quite happy to ignore this section. Okay, but it does look like now maybe we're starting to get a bounce. So again, repeat that process. We're going to take it from the previous high, as mentioned above, down to the current low, bring in all of those levels, 38, 50%. And again, we're going to preempt it and we're going to draw in that potential sell zone. This is where we're looking to get involved. And again, we're not looking to buy into this. Even if we feel like, okay, this is due a retracement back up into this 61%, you can take that trade, but again, you're going against the momentum. So bear that in mind. Okay, I would rather wait, be patient, see it get up into this zone, and then get the opportunity to try and sell this. So let's follow this market through. That low here, okay, it's being challenged, but it's still intact. Still intact here. Just going to nudge that Fibonacci across slightly further, bring that box with it. Okay, you can see if you were long at this point, trying to take it up to this Fibonacci, you'd have now been in this for a fair while with little to show for it. Again, we hold that low, that remains the low, and up we come, straight through the 38%. Be diligent with this, folks. It's a game of disciplined trading. If it breaks a level, take it off the charts. See where we go now. Up we come, straight through that 50%. So that comes off up to that 61% region. Okay, now, primary analysis. Potentially, what have we got going on here on the chart that could give us an indication that we could be expecting a bearish reversal? Not resistance particularly. You've got the 61.8, but of course that's secondary. There's not a huge amount else here. There's no level through here, but that's good enough. Shooting star, yeah, absolutely. Look at this candlestick pattern at the top here. Okay, week 2 material, shooting star here. Okay, so that's a definite potential bearish reversal candlestick. Let's see though. Again, that's one primary. Potentially, is there going to be something else that could come to our aid from a primary perspective? Is there anything else that could come to our aid? We mentioned resistance. I really don't think there's too much resistance here. If I was to put a horizontal resistance level through there, not really any relevance back through here. If anything, it's up here, so not a lot for us there. Trend lines, absolutely. Okay, let's put a trend line in from the high here. 2 touch at the moment. Yep, 2 touch at the moment, so tentative. So we'll just hash that out. Okay, 2 touch tentative trend line. Always worth checking to see, are we in a potential channel? Yeah, it's not bad. It's not too bad at all. We've got to cut a lower shadow here, but no, I'm cutting no bodies. Nice retest here, and move down for a weak test towards the lows here. Okay, so potential. So far we have a 61% retracement, a nice shooting star. Let's remove that sell zone so we can see it slightly clearer. But there is this nice potential primary set up above. Ideal scenario for here, of course, this 61% retracement and that trend line form a level of confluence where you get a primary and the secondary all sort of combining together to bring about some pretty strong selling pressure. So again, in my experience, these trend lines tend to act like magnets. The price will find a way to get there. It may take longer than you think. It may do it in a fairly abnormal way, but it will find a way to get there. So again, wait for that confirmation. Okay, if we just take the same methodology and approach that we have to the previous trades, we'd wait for that previous higher low to be broken, which would be this fella here. Okay, this one right here. That's a long way away yet, as of yet. So looking at that as a potential entry level, you can see some selling pressure starts to come in. Certainly at that 61.8%, a lot of people are interested. It's been relevant in the swings back through here previously. But we haven't gained too much momentum as of yet. Starting to gain some, but again, that low here hasn't been broken. That significant higher low, that's that extra confirmation we're seeking, hasn't been broken. And a little bit of patience here results in this. A move back up to this 61%, and now a test of that level of that junction of the trend line and the 61%. So now we're at a position where, okay, I can confirm this as that higher low. I've now got what potential price pattern formation here? Potential price pattern formation here. Double top, okay, absolutely. Why am I reluctant to call this a double top? Why am I reluctant to call it a double top? It's formed in the right part of the chart. We're at a nice 61.8% sort of potential reversal area. Why am I reluctant to call it a double top? Anyone? The prior trend. Okay, the prior trend. A double top should form at the top of a uptrend. Top of an uptrend. Okay, this is not necessarily a nice strong uptrend. Okay, this is a pullback corrective move. So reluctant, I would rather just see this as a strong resistance level. Okay, I'd rather see this as a strong resistance level rather than a double top. But entry, regardless of that, remains the same. Looking for a short through the low, stop loss above the high, and targeting back to the previous low. Now again, risk to reward ratio here, not particularly strong, 1.16. Okay, so a few things we can do here. Okay, and one of those is introduce the Fibonacci extension. Okay, what is the Fibonacci extension? The extension is a tool we can use based again from Fibonacci to establish targets. Okay, to establish targets. So far this retracement has given us an entry level up here at this 61%, which has led to this. However, I want to be slightly more ambitious with my target. I'm in a confirmed downtrend here. I expect this market to go on and create another lower low, potentially somewhere down through here, if this is going to carry on with the similar kind of momentum that we are showing now. So what are we going to do? We are going to take, I'm just going to remove the retracement from here. We're going to utilize the same highs and lows that we used to apply the retracement. And I'm going to come from the previous high down to the current low, back up to the retracement level. And that will provide me with a 100% extension. Okay, that 100% extension, put simply, is the vertical height of this initial sell-off. The vertical height of this initial sell-off. If I take a copy of that, if this next move was to do the same again, it would see us down to this 100% region down through here. So what we can look to do here, with that knowledge, is apply a T1, a target 1, and a target 2, and try and maximize our profits. Let's remove that out. We're going to take target 1 back to the previous low, and target 2, we're going to come down to this 100% extension. Okay, now of course, in order to achieve that 100% extension, it means I've got to try and get through, if it was a rapid descent, I've got to try and get through this channel support down here. However, Provided this goes on a nice kind of winding, swings lower and lower, we should find ourselves at this 100% extension before we get to that channel support down here. The other thing, of course, that's worth doing, this is secondary, so it's always worth put the primary support level in there, check back through your chart historically and see has this got any relevance. Okay, and hopefully we'll all agree it has. Certainly here, nice turning point in the market as support. Multiple attempts here and failed. Broke, little retest here before we broke back up through that level. So hopefully we'd agree that has got some relevance to it. So there's our options now here. We've now used the second tool here within Fibonacci to provide us with a target. So this has been a nice slow grind. Attempted sell-off, back we came. Let's see what momentum we can pick up now that everybody's on board with hit that trend line. Look how rapidly we get down to T1. Okay, straight through T1, down we come. Let's see, can we hit that 100% region? Getting close. There, we found it. And look how we do get a bounce off of that support region. We test it multiple times before eventually we break. So we can show it did have some relevance. But this downtrend's so dominant through here, and the use of Fibonacci has given us a great opportunity to try and capitalize on these moves. Okay, so again here now, we are into lower highs and lower lows. Okay, so there's a few examples there on Fibonacci retracement and Fibonacci expansion. Okay, so little challenge. This is really important that we are able to accurately do this. So let's start from here. Right, I'm going to look for an opportunity to sell, to short, at this point here. Okay, we're going to look for an opportunity to do that. And I want to just pop in bear with me just whilst I do this, B, C, please feel free to pop any questions into the chat that you've got at this point in time. H. All right, nearly there. J, and last but not least, K. Right. Okay, I'm looking for a short opportunity. Absolutely no reason at all, Erdal. Erdal was asked the only reason why I didn't use an expansion on the trade before. No reason whatsoever. I just wanted to go through an example at the end. How does the price stop on resistance and trend lines? The amount of people trading, how does it just stop there? Recognition. Recognition. We're all looking, we're all going searching for those primary support resistance trend lines. We're all aware of that. That's an area which we're all focusing in on, looking for opportunities to trade. And then human psychology and emotion and that battle of supply and demand starts to take effect. If enough people in the market see that as a potential resistance zone, you're going to have profit taking for those who are long, and then you're going to have those looking to take short. And then that balance of supply and demand comes into effect, and we see one of two come out on top. And typically, with a trend line such as that, those sellers, that selling momentum, majority of people in the market carry the greatest weighting and force that price lower. So here we are. I'm going to look to take a short position here. You are going to apply a Fibonacci retracement. Now you've got a series of letters here. Which letter are you going to fib from and to? Bearing in mind that we are looking to go from the previous high to the current low. What options have we got? Should be two letters you put in the text box. Could be C to F, A to B, G to H, give me whatever you like. You want to go from the previous high to the current low. E to J from Suresh, I to J from Petra, G to J from Charles. That's 3 different options so far. G to J from Eve. Okay, so G to J taking the lead. I to J from Rehan. G to J. Okay, G to J taking a small lead, but not commanding by